the question. We've talked about a barn. We grew up in Wisconsin, and there's lots of barns here. You heard the saying, you could miss the broadside of a barn.
Broadside of a barn.
Well, that's a bad shot, right?
Yeah.
And that's kind of like trying to hit the ball into the water and missing. And that's exactly what happened with the economists this past Friday when they told us that we could have somewhere in the neighborhood of 900,000 to 1 million jobs. That didn't happen.
No, it didn't. It didn't by a wide margin. In fact, we came in at 266,000 new jobs in April, way shy of estimates, the biggest miss relative to expectations in decades. And in fact, there was one Wall Street economist who thought we'd have a 2.1 million jobs print this past Friday. So clearly the economists were wrong. The question is, why did the market rally?
Yeah, that's right. First of all, let's just say there will be revisions. There's no question. You can't miss it by that much. And so there will be revisions. Maybe next month we'll see some of those jobs come out, or when they revise backwards, they'll add them to those jobs. But, the market started to rally because we thought the Fed earlier in the week said, let's watch interest rates. And in fact, on Friday, Janet Yellen said maybe interest rates may have to peak up, and the markets didn't like that. With a jobs print like this, interest rates aren't going anywhere.
No, it certainly reduces the risk of the Fed beginning to that conversation about tapering, and I think that's what people like, particularly in the tech sector, where the prospect of higher long-term rates has really spooked those that are invested in long-duration growth stocks. So long-duration growth stocks had a real strong day, and at the same time, the usual suspect, the commodity plays, the coppers, the financials, they all rallied as well. So it was a very strong, broad-based rally, and we closed at new all-time highs on Friday in both the Dow and the S&P.
Yeah, 5 days in a row this past week. In fact, tech joined the party as well, as you just mentioned. But, I want to go back to this jobs report because it is really a head-scratcher, and you have to say there are so many people that are still out of work. I heard the president say that just this past week, but there are jobs available, and you have to ask yourself, why isn't it happening? And I think the Wall Street Journal did a nice job this past week of trying to explain it. They led with enhanced unemployment that is going to continue to get paid until the end of the summer. That was one. Two, and it was a bit of a political argument, but they made it that closed schools and teachers not returning back to the classrooms made mom and dad have to stay home because they couldn't return to those jobs as well as fear of getting COVID. So there was a number of workers. I think you can make the argument, Derek, that companies engaged technology and maybe they don't need all those jobs back as well.
And also there's, it's hard to restart an engine if you'll restart a business. And sometimes that takes longer than you expect. And we've heard about lots of bottlenecks and whatnot. That's also probably retarding job growth as well. So generally speaking, what we'd focus on, though, as an investment committee is trends. And the trend in the labor market has certainly been positive. We've seen that in jobless claims. We've seen that in the ADP report. And we've actually seen it in the monthly job reports. This one's a little bit of a blip. So next month is going to be under greater scrutiny.
Yeah, that's exactly right. So you can't look at one number in a vacuum. You have to look at the trend. The trend is good, even with perhaps retired workers, for example, or people changing workforce, or restaurants, for example, who aren't bringing people back. That is a challenge. The trend is in the right direction, and so is GDP growth, which is with a stunning number out of the Atlanta Fed this past week.
Yeah, right now the Atlanta Fed is forecasting 13.6% Q2 GDP growth. That's on an annualized basis. That makes the numbers we saw in the during the Obama and Bush years look, minuscule, and Trump years as well. And that's, again, against a very soft comparison from last year when we had shut down the economy. But generally speaking, the Fed is still clearly on our side. We know the fiscal stimulus is coming. Biden, in fact, reiterated the need for more stimulus spending subsequent to the jobs report. And I thought it was kind of interesting. He absolutely rejected the idea that unemployment benefits are keeping people from returning to the labor force, which I find almost laughable.
Yeah, there's no question there's a political argument to that as well. The Fed is with us. Interest rates are low, and earnings have been fantastic. Definitely time to know what you own, why you own it, and how much you're paying for it.